Welcome back to the Malaysian Money Matters show. It's the 7th of March, 2025, and get ready for a roller coaster ride through Malaysian company news because we've got data center mysteries, airport shakeups, and even a legal battle brewing. Let's dive right in.
Sounds intriguing. Let's unpack this.
First off, AirAsia is making a U-turn. Remember they shifted domestic jet services back to Subang Airport just 7 months ago? Well, they're already heading back to KLIA too.
Yeah. What's fascinating here is that while they're blaming the Subang redevelopment timeline aviation analyst, Brendan Sobey suggests that the Subang operation simply wasn't profitable. He points to the fiercely competitive, price-sensitive domestic market as a major hurdle. This move might even expose weaknesses in Subang Airport's grand plan to become a regional hub.
So this raises the question, is Subang's ambition to be the next big aviation hub in trouble? Meanwhile, on a brighter note, Sunway Construction just bagged a whopping 1.5 billion ringgit contract for a rapid transit system project in Johor. That should ease their reliance on data center projects, at least for now.
Yeah, analysts are buzzing about this win because it smooths out Suncon's earnings and positions them for future growth. Here's where it gets really interesting, though. They're still contenders for massive data center expansions, potentially worth billions for a client from a Tier 1 country shrouded in secrecy for now.
Ooh, a data center mystery client. Could this be a tech giant looking to tap into Malaysia's digital infrastructure boom? Speaking of ambitious plans, CIMB Group Holdings has unveiled a 6-year roadmap targeting a 12% to 13% return on equity, ROE, by 2027. Just to clarify for our listeners, ROE is a key measure of profitability showing how effectively a company uses its investments to generate profit.
Right. Analysts highlight that for CIMB to hit this ambitious target, they need to attract more low-cost deposits and boost income from non-interest sources, particularly in Indonesia. That's a tall order, especially in such a competitive market.
It certainly is. And now for some boardroom drama. KLIA Sarawak is being sued by its own deputy chairman, Datuk Seri Mahmud Abu Bakar Taib, who's demanding access to the company's financial records.
That's a bold move. CMS claims they were willing to cooperate but needed more time to prepare, but Mahmoud decided to take legal action. This raises an important question. What information is he seeking, and could this power struggle impact the future of CMS? It'll be interesting to see how this unfolds.
Absolutely. Switching gears, Lotte Chemical Titan has opted out of purchasing a 25% stake in PT Lotte Chemical Indonesia from its parent company. This comes after they reported a significant quarterly net loss last month.
This suggests they're focusing on weathering the current financial storm and consolidating their position before making major acquisitions.
Makes sense. Now, in a move towards a greener future, MHB's subsidiary, MMHE, is partnering with US-based Fuel Cell Energy to develop large-scale hydrogen production systems across Asia, New Zealand, and Australia.
This signifies a significant step towards green energy solutions and aligns with Malaysia's goal of achieving net zero carbon emissions by 2050. Could this collaboration catapult Malaysia to the forefront of the global hydrogen market? Only time will tell.
It's certainly a possibility. Remember that data center mystery client we discussed earlier? Well, there's another twist in the data center saga. XIM has terminated its contract with Singapore-based AirAsia Cloud Services, following a legal case against AirAsia's executives.
This is the story there.
AirAsia's executives are accused of diverting AI-enabled servers, potentially violating U.S. export restrictions. This highlights the sensitivity surrounding AI technology and data security in the global chip market. XIM, however, claims that discussions to end the contract began before these legal issues surfaced, and they've already secured a Japanese Fortune 500 company as a replacement.
That was quick. Data center space must be in high demand. This incident underscores the complex dynamics of the global chip market and the increasing importance of data security.
Absolutely. In other news, PN17 company Nilux faces delisting from Bursa Malaysia on March 11th after their appeal for an extension to submit the regularization plan was denied. They've been granted several extensions already after divesting all their assets in 2022.
This delisting raises questions about the company's future. What will this mean for investors who've stuck with Nilux through its struggles? This situation warrants close attention.
Definitely. Finally, SDS Group, a bakery products maker and retailer, has proposed a 1-for-3 bonus share exercise, aiming to reward shareholders and boost trading liquidity. This marks their first such initiative since listing in 2019.
This could be a positive sign for the company's growth prospects. It will be interesting to see if this move attracts new investors and breathes life into their stock performance.
So that's the rundown on Malaysian company news. Let's shift gears and zoom out to the global landscape. What are the international events impacting Malaysia right now?
Let's delve into that. Well, China's shaking things up in the tech world. They're loosening the reins on M&A loans for tech companies, signaling a potential push for innovation and growth.
So they're making it easier for tech companies to merge and acquire others. Does this mean we could see a surge in Chinese tech giants, maybe even challenging the U.S. dominance?
It's a strategic move, that's for sure. And there are whispers of further monetary easing and stimulus measures from China if economic growth falters.
That's interesting. What could that mean for Malaysia? More opportunities to collaborate with Chinese businesses.
Potentially. If China's looking to boost investment, consumption, and foreign trade, Malaysian businesses could find new avenues for growth. Of course, they'll need to carefully navigate the complexities of currency fluctuations and the ongoing U.S.-China trade tensions.
Speaking of the U.S., the debt ceiling deadline is fast approaching. There's a real chance they could hit their borrowing limit as early as mid-May. Can you break down what the debt ceiling is and why it matters?
Sure. In simple terms, the debt ceiling is a limit set by the U.S. Congress on how much money the government can borrow. If they hit this limit and can't borrow more, it could trigger a default, causing chaos in global markets and potentially shaking investor confidence worldwide.
It sounds like a political hot potato. The Republicans are pushing for tax cuts alongside the debt ceiling increase, but they're facing internal divisions that could derail the whole thing.
Exactly. It's a delicate balancing act, and the outcome could have significant repercussions for global markets, including Malaysia.
And then there's the ongoing trade war with the U.S. imposing tariffs on various goods, including those from Canada and Mexico. Other countries are retaliating and things seem to be escalating.
Right. This escalation is fueling market volatility, and there are growing concerns about a potential slowdown in global energy demand. We could even see cancellations of agricultural contracts impacting U.S. crop exports.
How will this trade war play out for Malaysia? We're a major exporter of semiconductors and palm oil, and any disruptions could have a ripple effect.
It's certainly a cause for concern. Malaysia's economy is tightly interwoven with global trade, making it vulnerable to these external shocks. We'll have to wait and see how this unfolds.
From tech shakeups in China to the U.S. debt ceiling drama and escalating trade wars, it's a lot to process. Let's bring it back home and focus on what's happening in Malaysia on the policy front. Bank Negara Malaysia has decided to hold the overnight policy rate, or OPR, steady at 3%, which is in line with what economists were expecting. This marks the 11th consecutive meeting with no change to the OPR. So why the decision to stay the course?
Economists predict that Bank Negara will maintain this rate throughout 2025, citing stable economic prospects and manageable inflation as key factors. This could be seen as a vote of confidence in Malaysia's economic resilience.
But will this be enough to support growth amid all the global uncertainty we just discussed? What does it mean for the average Malaysian for their loans and investments?
That's the million-dollar question. Keeping the OPR steady could encourage borrowing and investment-boosting economic activity. However, it could also fuel inflation if demand outstrips supply. It's a delicate tightrope walk for Bank Negara.
Meanwhile, CIMB Securities is forecasting a 7% drop in car sales this year, partly due to the government's planned introduction of targeted subsidies for RN95 fuel in July. This is a significant shift from the blanket subsidies we've seen before.
This forecast differs from the Malaysian Automotive Association's prediction of a 4.5% decline. CIMB highlights that this shift towards targeted subsidies could intensify competition in the premium segment, while the mass market remains relatively resilient, thanks in part to other government policies.
It'll be interesting to see how this plays out. Will we see a shift in consumer preferences towards more fuel-efficient cars, or will the mass market remain loyal to the familiar RN95 fuel?
This policy change is a prime example of how government decisions can create winners and losers in different market segments. It's a dynamic situation that we'll be following closely.
And in the energy sector, it seems coal is still the mainstay of electricity generation, at least for now.
The government has made it clear that they're sticking with coal to ensure affordable energy for consumers. However, they've also emphasized their commitment to exploring cleaner, more sustainable energy options in the long run.
It's a classic dilemma, balancing the need for affordable energy with the urgency of addressing climate change. Can Malaysia transition to a greener future without compromising its economic growth?
It's a challenge many countries are grappling with. Malaysia's commitment to exploring renewable energy sources will be crucial in determining its long-term energy sustainability.
On a more positive note, DNB and Ericsson have joined forces to accelerate Malaysia's digital transformation through 5G and 5G advanced technology. This partnership focuses on empowering businesses and driving innovation, aiming to position Malaysia as a regional digital leader.
This is a promising development. The rollout of 5G and advanced technologies will be crucial for Malaysia to stay competitive in the global digital economy. It's a step in the right direction.
And to attract more foreign investors, the government is introducing a special pass in April, allowing them to stay longer in Malaysia to facilitate their investment activities. The pass will be issued electronically, streamlining the process.
This move signals the government's commitment to making Malaysia a more attractive destination for foreign investment. By easing the process and reducing bureaucratic hurdles, they're hoping to attract more capital and boost economic growth.
Makes sense. Now for a major policy shift. The Dewan Rakyat has passed amendments to the EPF Act 1991, making EPF contributions mandatory for foreign workers.
This is a landmark decision with far-reaching implications. The policy aims to create a more balanced labor market, reduce reliance on low-skilled foreign labor, and potentially even bolster the ringgit by stemming capital outflow.
It will be fascinating to see how this impacts the labor market wages and Malaysia's overall competitiveness. Will this lead to higher wages for Malaysians, or will businesses face increased labor costs? It's a complex issue with no easy answers.
It's a bold move, and it will undoubtedly reshape the landscape of Malaysia's labor market. We'll be keeping a close eye on how this unfolds.
And finally, the Transport Ministry is planning to incentivize cargo and transport companies to use the upcoming East Coast Rail Link, or ECRL. They're aiming to reduce road congestion and minimize accidents by shifting cargo transportation to rail.
This is a strategic move to leverage Malaysia's infrastructure investments and improve logistics efficiency. If successful, it could significantly reduce transportation costs and boost connectivity across the country.
Wow, we've covered a lot of ground today, from global economic tremors and political dramas to Malaysia's own policy shifts and company news. Let's take a moment to reflect on what stood out the most. What news do you think will have the biggest impact?
For me, the most significant developments are those with the potential to reshape Malaysia's economic landscape in the long term. The decision to make EPF contributions mandatory for foreign workers is a game changer. It has the potential to create a more level playing field in the labor market, but it also raises questions about its impact on businesses and the overall economy.
Yeah, I agree. That policy shift is definitely one to watch closely. And the government's commitment to sticking with coal for now, while also exploring renewable energy options, highlights the delicate balance they're trying to strike between economic growth and environmental sustainability.
Absolutely. These are not easy choices, and the implications are significant. It will be crucial for Malaysia to carefully manage this transition to ensure a sustainable future.
And let's not forget about those targeted fuel subsidies coming in July. They could significantly impact consumer behavior and reshape the automotive market. Will we see a surge in demand for fuel-efficient cars, or will the mass market stick with familiar options? It's a question we'll be exploring in more detail as we get closer to the implementation date.
Indeed. These policy changes will have a ripple effect across various sectors, and it will be fascinating to see how businesses and consumers adapt.
To our listeners, we hope you found this deep dive informative and thought-provoking. We always encourage you to stay curious, stay engaged, and keep those questions coming. What news resonated with you the most today? What are your thoughts on the future of Malaysia's economy?
We'd love to hear your perspectives, and if you want to stay ahead of the curve and gain a deeper understanding of the forces shaping Malaysia's financial landscape, be sure to subscribe to the Malaysia Money Matters podcast.
Until next time, stay informed and keep exploring the dynamic world of Malaysian finance. We'll be back with more insights and analysis soon. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.